Here's what's going on this week in the U.S. economy and what it really means for your money. Let's unlock the bag, one data point at a time. Monday, June 2nd, we're getting a double dose of manufacturing PMI data. S&P Global drops their final numbers at 9:45 a.m. and the ISM report follows at 10 a.m. So why does this matter? Because these numbers show how strong or weak the manufacturing sector is. If they're dropping, that's a red flag for growth. If they're rising, it means factories are busier, demand is up, and the economy's got some muscle. Also dropping Monday, construction spending at 10 a.m. This shows how much money is flowing into building new homes, roads, and commercial real estate. And in a high interest rate world, that number speaks loud. At 1 p.m., all eyes on the mic. Fed chair. Jerome Powell is giving opening remarks at a big Fed conference. He might drop clues about future rate moves, and Wall Street will be listening very closely for any shift in tone. Thursday, June 5th. It's Jobless Claims Day. That's the weekly snapshot of how many people are filing for unemployment. If that number creeps higher, it could signal the job market softening. If it stays low, the economy's still running hot, and that could mean more pressure to keep interest rates higher for longer. Friday, June 6th. This is the main event, the May jobs report. We'll find out how many jobs were added last month, what the unemployment rate looks like, and how fast wages are growing. Why should you care? Because this single report could shift the entire stock market. If job growth is strong and wages are up, that's great for workers. But the Fed might read that as inflationary pressure and consider keeping rates elevated. If job growth slows down, that could mean the economy's cooling, and rate cuts might come sooner than expected. So, yeah, Friday's report, it's a big deal for investors, home buyers, and anyone watching what the Fed does next. Here's the big picture. This week is all about the labor market and manufacturing. If both look strong, the Fed stays hawkish. If there's weakness, rate cuts could be back on the table later this year. Either way, your money's on the line. Whether you're investing, paying off debt, or watching mortgage rates, this week's data could shift everything. So stay tuned and follow for the real breakdown on what actually matters.